Welcome to Stock Talk. Today, we're doing one of our deep dives, really slicing through the headlines to focus on a specific investment thesis. And today's mission, we're unpacking an analysis from stocktelescope.com. It's all about Tesla, Inc., TSLA, and their stock forecast. Now, Tesla, it's probably one of the most talked about stocks out there. Always seen as, high risk, but maybe high reward. But what's the actual data telling us, beyond all the hype?
Well, yeah, and what Stock Telescope flags right away is pretty striking. It's Tesla's market cap, currently $1.07 trillion.
Yeah.
And when you put that next to its trailing PE ratio, which is over 200 times.
200, wow.
Exactly. Especially when, the average for the auto industry is somewhere between 6 and 12 times PE. It just suggests a valuation that's, well, maybe unsustainable. It implies this expectation of near-perfect execution across, frankly, multiple business lines that are still very early stage or even unproven.
That valuation gap alone is huge. Okay, so digging in. What did Stock Telescope find in, say, Tesla's Q2 2025 performance that brought on this reality check?
They really drilled into those Q2 numbers. And the picture wasn't great. Total revenue, down 12% year over year to $22.5 billion.
Okay.
And operating income took a massive hit. It plummeted 42%. 42%. Plus, vehicle deliveries dropped 13%. That's actually the steepest quarterly drop they've ever recorded. And another key thing is their dependency on those regulatory credits. They fell quite a bit in Q2, and importantly, they're mostly ending soon. That's going to hit future profits, too.
Right. So the main car business definitely faced some real headwinds, but, everyone's buzzing about robotaxis. Is that the potential game changer here, or does Stock Telescope see issues there, too, especially compared to the competition?
Yeah, the analysis makes a really sharp contrast here. Tesla's robotaxi effort in Austin, it's quite limited right now. We're talking maybe 10, 20 vehicles. It's geofenced, so only in a specific area. Still needs human safety monitors inside.
Okay. Not fully autonomous then.
Not fully driverless in that deployment, no. And it relies only on cameras. Now compare that to Waymo. Waymo was doing over 250,000 autonomous trips per week across multiple cities, fully driverless operations. And they use multiple sensors, including LiDAR, which many see as critical.
Right. LiDAR versus camera only is a big debate.
It is, and Stock Telescope's conclusion, based on this, is that Tesla is, quote, multiple years behind Waymo in actually rolling out a commercial scalable service.
So the robotaxi dream, according to this analysis, is maybe more future promise than something justifying the current stock price right now.
That seems to be the takeaway. It's largely speculative at this stage.
Okay. So despite those challenges, the core auto business, the robotaxi timeline, was there any part of Tesla's business that Stock Telescope pointed to as a consistent bright spot?
Absolutely, yes. The energy business. That really stands out as a legitimate growth story. It just marked its 12th consecutive quarter of record energy storage deployments, hit 9.6 gigawatt hours in Q2.
Impressive.
Yeah, and it also brought in a record gross profit of $846 million for the quarter. So this is, real consistent growth. It's separate from the robotaxi speculation. It really positions Tesla as a leader in grid-scale battery storage, a genuine strength.
Okay, interesting. A solid positive there. Finally, then, let's talk broader financials. Beyond PE, how strong is Tesla's overall financial footing, considering everything?
Well, they definitely have a strong balance sheet. Stock Telescope notes $36.8 billion in cash and investments. That gives them a lot of flexibility strategically.
Sure, that's a good cushion.
It is. However, the critical point the analysis raises is about cash flow. It's deteriorating. Free cash flow actually collapsed by 89% in Q2, down to just $146 million.
89%. Wow, that's significant.
It is. And it really raises questions about how they'll fund all those ambitious future plans like the robotaxis and factory expansions without seriously straining their finances down the line.
Right. So they have the cash pile, but the rate they're generating new cash is suddenly a concern. So putting it all together, what does this mean for you, the listener, if you're looking at TSLA stock?
Stock Telescope's verdict is pretty direct. Hold cautious. They put forward a fair value range of about $180 to $220 per share.
Okay. And the stock is currently trading where?
Around $332.56 when the analysis was done. So that suggests, significant overvaluation based on these fundamentals. It really frames it as a speculative investment, requires a long-term view, and frankly, a belief that Tesla can execute almost perfectly going forward.
So it really boils down to a fundamental question for you listening. How much weight do you personally put on that ambitious future vision versus the company's current performance, its fundamentals, and the realities of the competition right now?
Exactly. And of course, we have to include the necessary disclaimer here. This investment thesis we discussed from StockTelescope.com is purely for informational purposes. It does not constitute investment advice. Tesla is a high-risk investment. There's potential for significant losses. Any investor should absolutely conduct their own thorough due diligence and consult with licensed financial advisors before making any decisions.